just because resources are going up and the banks have come off the top, there's no reason to sell the banks.
Tell me about the banks.
The bank sector in Australia has come off the top for the first time since November last year. It has been the sector to play for an improvement in the inflation and interest rate environment, which we'd been waiting for 2.5 years. It started in November last year and the banks took off. And some of the banks have been up 40% plus, which is just astonishing for a sector that hasn't really got any earnings growth, but it has got a decent yield. And the reason that's gone to a premium is because they are some of the lowest volatility stocks in our market, the most reliable earnings, and they've got payout ratios above 60-70%, which means they're good income stocks. So the money has just flooded into the banks, pushed them to all-time highs, and they are, in the words of one broker, unquestionably expensive, and that is true compared to history, but the weight of money coming into them has driven them to all-time highs. Now, just recently, the resources sector took off for the first time in a while as the central bank in China started to cut interest rates and try to stimulate their economy, and the bank sector started to come off. And the two events happened at the same time, and it was seen as a switch out of resources into banks. The concern for a lot of retirees in particular who rely on the banks for income and have held them possibly for many years and have capital gains tax problems maybe. Most people don't have capital gains tax if they're in pension phase. But the concern for most people is there something seismic going wrong with the banks as the resources rally? I would say to you, no, there is nothing wrong with the banks at all. Maybe they've come off because some institutions did a switch out of the banks into resources. Maybe there's a few international institutions that are not interested in income that did that switch. But for the stay-at-home retiree investor relying on income, there is nothing wrong with the banks. And the only time you need worry about the bank sector is during seismic sector-specific events like a global financial crisis or the banking sector inquiry. The only other time you need to worry about the banks is when you need to worry about the whole market. So when the market falls over, I think that will be the catalyst for the banks to lose their froth and come off the top. And a small correction like this, they're down about 6.8% as I speak. They're down about 6.8% from the top. I think you'll find in an environment where interest rates are going to go back to where they were pre-COVID, in my humble opinion, which is 1% or so. In that environment, stocks with reliable earnings and high yields are going to remain at a premium. And I think what you'll find is the moment the high-yielding quality stocks, the banks, start to show weakness, they will be relentlessly bought by everybody again. We've got an income portfolio which is running about 20% cash at the moment, which is rather a lot for a market hitting all-time highs. But we are hoping to get back into the banks on weakness ahead of ANZ, NAB and Westpac's results coming up in November. And we hope to buy them on weakness and catch their results and dividends. So if you are sitting there wondering, whoa, is it all over in the banks? No, it's not. A lot of retirees are going to hand their shares to their kids anyway, so they don't care what the share price is. They will continue to earn, it's around $1,500 in unnecessary profit off every man, woman and child in Australia. They're very profitable companies, very reliable. They're not growth companies, but they will continue to pay a decent yield and they will be bought on weakness. So sweat not about the banks. They are still the best income stocks in Australia, if not the world, and they will be bought on weakness. So just because resources are going up and the banks have come off the top, there's no reason to sell the banks.